Meanwhile, the S&P and NASDAQ coming off 4 consecutive days of losses, the NASDAQ's worst stretch since September. Our next guest flagging that markets seem to be focused on growth weakness more than inflation worries here. Lizanne Sonders joins us today, Charles Schwab Chief Investment Strategist. Lizanne, great to have you. I guess that comment truly being backed up by what bonds have done lately, right?
Yeah, it does. And I think in this cycle, or at least the past year or so, we have seen different shorter-term time periods where yields are keying off of inflation to a much greater degree and are keying off growth, both on the upside and the downside. I think this move down in yields is much more reflective of concerns about growth, not reflective of some thought that we're going to see a re-rolling over in inflation on the downside. And that's part of the reason why you've seen this shift, notwithstanding today, to more defensive areas from a market perspective.
We've been keeping a long list of the macro data cracking, I guess you could say, whether that's some of the consumer sentiment surveys or retail sales or services PMI. But the desks also like to point out that it's also about policy uncertainty rising. Which do you think of those two things is more important?
I think the policy certainty on rising piece of it certainly has filtered its way into a lot of the soft data, the survey-based data. You've seen it in the PMIs. The Dallas Fed survey that just came out, sometimes some of the more interesting tidbits that you get in those surveys is the verbatims from companies. And boy, it was an eyeful or an earful, depending on how you're getting that information, just in terms of the uncertainty that is becoming pervasive. And that's why you're seeing things like buying intentions for big ticket items move down. You're seeing CapEx intentions and spending plans really pull down. Now, it's important because one of the things we've seen recently, as noted by the PMI data, is services starting to roll over, but manufacturing picked up. And that is something that we had hoped for, that you would see this conversion between the manufacturing side and the services side. My fear is that this pickup in manufacturing could stall by virtue of this policy-related uncertainty, and you're certainly hearing that from the companies in that space.
What about Doge, Lizanne? I mean, if they really are cutting billions and maybe even trillions, do you worry about the economic impact of that? I know austerity is like a dirty word, and we don't use that in this country, but typically it's because deficit cutting does hurt economic growth. Is that what's happening?
Well, we don't know what the actual numbers are yet. The goal was originally $2 trillion. That didn't make any sense mathematically because there's less than that in terms of just discretionary spending. So you really would have to eat into the entitlement side of things. I know the touted number right now is somewhere in the 80 to 90 billion, but what shows on the site is less than 10 billion, which is a pretty small number in the context of what overall spending is. So I think it's premature to just hone in on that specifically. The collection of what's happening on the tariff front, on the Doge front, on the immigration and deportation front, pretty universally has led to downward pressure on growth estimates and upward pressure on inflation estimates, all else equal. So it's the collection of those as opposed to trying to pinpoint any one component of that. And then adding in the tax piece and the regulatory piece. The tax piece is more of a year-end story, not really a near-term story.
Right, although one that we're going to start talking about a lot more after last night's House vote. Lizanne, we'll keep it tight today, but talk soon. Lizanne Sonders, thank you.